for you to talk about Snowflake, cloud stocks, and who knows what else. Chris McMahon's with us, President and CEO at Aquinas Wealth Advisors, and Ed Butowsky is here, managing partner at Chapwood Investments. Thank you both for being here. So Ed, I'll start with you. Look, we're waiting for these Snowflake numbers. What are you watching on a stock that year to date is down 32% and has gone from $237 down to $107 at one point? That's tough.
I'll tell you, Nicole, this is a real tough one because they had a data breach that really hurt their customers quite a bit. AT&T was part of that, and a couple other really well-known companies, were hurt because of this data breach, and that also makes it really, really difficult for them to bring in new customers because data and security is something really important to the cloud, and so that was damaging to them. But we're estimating about 16 cents for earnings per share and a revenue estimate of $850 million.
All right, let's ask Chris here. Chris, I mean, you noted the slowing earnings, the Berkshire Hathaway sell-off. Some of your thoughts?
Yeah, I think you're right on. I think that's right. The data breach, that's a big problem. But my goodness, when Berkshire Hathaway says we're selling your stock, that is the kiss of death, at least short term. I think what they're struggling with is they're just cumbersome, right? They're a big firm. They were great at data storage, but this predictive AI is such the big thing now. I don't think these guys have been nimble enough lately. Their growth is about half of their competitors. If you look at Databricks or some of the other firms that are out there, their growth is double. And when you think about that for a second, you say, well, why is that so? Because I think they haven't pivoted quickly. They have a new chairman. He might help them. But our earnings per share are even a little lower than Ed's. We think it's going to be about 14 cents a share.
Ooh. So I wonder how the stock would react, and if it sells off, Ed, would you buy it? How do you think it might react, and would you buy this stock?
I'll tell you, there's a lot of other companies in this sector that I would buy before I would buy Snowflake. And Snowflake, if you think about it, they have revenue of $850 million. And they're not really making that much money. So their expenses have really risen quite a bit. Their operating costs have risen. So I don't believe that the company has really, kind of fixed itself yet to have a really good revenue and have their costs under control. So there's too much variability here that I don't like.
So what would be the other names that you do like better, Ed, since you mentioned them?
I like Twilio and GoDaddy and Rackspace.
Okay. Chris, what say you? Because you look at this and you talked about other companies that have been gaining fast in this competitive space.
Yeah, I think, the Gen AI, is everybody's talking about it. And I think people are saying Snowflake hasn't adapted quickly enough to the Gen AI. I like Ed's picks. I think Databricks is still privately held, but that's a company that we look at very closely when it comes on. So I think in general, the Gen AI is where it's at, and these guys have to change something. They're bolting on other services to get their Gen AI working. They have to have a process that doesn't use exterior processes. They need to have it all in house.
Yeah, there's certainly as we look at cybersecurity, you look at cloud, you look at AI, the space is endless and it doesn't seem to be slowing down. Maybe the earnings are slowing because there's increased competition, but these areas seem to continue to grow. And if we broaden it out, what else is interesting to you?
Well, in terms of technology, I really like, a lot of the online companies like the Facebooks, or Meta, and, companies that can grow by expanding, their consumer base. I really, don't really like the infrastructure stocks that much because I don't think the growth is there. I think the B2C is really where it's at, not B2B.
Yeah, understood. You're looking at a slew of techs. You've been doing this as well a lifetime. Just like Ed, the two of you are fully immersed. When you think about this group and broadening it out, are there names that you certainly seem to count on?
Nicole, I'm going to say one I think everyone's said 100 times. We were looking, back at NVIDIA and thinking they have room to run again right after the split. And that's
you think so?
Why get too complicated, right?
Right.
We think we have a 35% upside on that stock over the next 12 months, and we think, post-split, it's in a better position than it's ever been possibly before.
Yeah, I mean, when you think about it, right? At one point, when it was below the 100 or around 100, I mean, I couldn't believe it. I really couldn't believe it because it had gone to 140 on the split, and people were getting really excited. They thought it was going to the moon, right?
Sure.
And then it had this volatility. When you think about volatility, I mean, that brings me to the next point. Right now, it's at 128 NVIDIA, by the way. So getting closer to that 140, it's been creeping back of late. Let's say 3 months up 35%. I don't know if that's right with the split, but let's talk, Ed, about the volatility in this market. And when you see these kinds of moves, I mean, the Fed is likely to cut rates. Are you going to be buying on dips? Are you feeling bullish overall?
Yeah, I love this market. I think that we are only going to have something very positive happen when we do see a rate cut. As David Dietz said a second ago on your show, probably looking at 50 basis points in September and maybe another 50 basis points in December. So I really believe that we're going to be set up for a really strong market, and anything that is interest rate sensitive is going to do well. I've said before, I'm piling up on utilities, and since I've said that, they're up 20%. I really like utilities a lot.
Oh, interesting. What else have you been looking at? I mean, I know at Aquinas you have an array of things, a faith-based group as well. Tell me a little bit about how you sort of do your investment philosophy there.
I think we especially on the Aquinas side, when we do faith-based investing, we start with an open funnel and we have a number of characteristics we look for. Particularly, we're interested in PE ratio and a few other things. And then after that, we add a whole slew of screeners around kind of social activism that these companies are taking, because a lot of the folks just haven't seen that yet. They didn't understand it. And when we're able to, using AI, as a matter of fact, shine light on it, people start to understand what they're investing in and what they're supporting, and people care. It's a fascinating time, and we're looking at that in great detail.
I'll give you the final word, Ed Butowsky.
I'm not afraid of the market at all. The volatility doesn't really scare me because I think it's upward volatility, and I would be a buyer of a lot of utilities right now.
Yeah. Thank you. Ed Butowsky, great to see you, managing partner at Chapwood Investments, and Chris McMahon, president and CEO at Aquinas Wealth Advisors.